Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is David Kuo, founder of the Smart Investor in Singapore. David, it's always nice to have you on the show.
Thank you so much. Yeah, it's me again.
Now, David, before we get your insights, let's take a look at how other markets are performing across the region. And we're going to start with cryptocurrencies. Bitcoin is at 37,998.3. Over a 24-hour period, it's up 3.61%. Ethereum is at 2,762.37. It's up 5.55%. Now, looking at markets closer to home, we've got the SGX Straits Times Index, which is at 3,165.25. It's up 0.13%. Bursa Malaysia is at 1,590.84. It's down 0.44%. The Nikkei is at 29,075.75. It's up 0.45%. The Shanghai Composite is at 3,610.9. It's up 0.38%. The Hang Seng is at 29,179.93. It's down 0.4%. The ASX 200 is at 7,264.5. It's up 0.65%. And rounding off the numbers is the Kospi, which is at 3,255.08. It's up 0.96%. David, what's your view on how markets have been performing across the region?
Pretty much of a mixed bag, I would say, Brian. And I think everybody has one number on their minds at the moment, which is those non-farm payrolls. I mean, I saw today there was one analyst who reckons that the number of jobs created could be as much as 1 million. You know, the last time we spoke, you know, the average
that was last month. That's last month's program.
No, the last time we spoke, I mean, the average figure was around 640,000, which would be fantastic, you know, if it reached that. But some people are saying it could be even a lot better than that, which therefore puts the Fed in a really difficult position, because it said all along that it was focusing on the unemployment rate and to try and get as many people back into work as possible. So if the figure comes out to be 1 million, I mean, that's a blowout number. What is the Fed going to do then? So more people are in work, and at the same time, you're getting inflationary pressures. Is it going to start pulling back on its monetary easing? And I think this is what people are watching, and people are very, very cautious about. Is the Fed going to start tightening again? And if that were to happen, maybe some of those more expensive stocks could suffer.
Yeah, because, you know, there was some good data this morning out of China, but purchasing managers index for May came in at 55.1, slightly lower than a reading of 56.3 in April, but still good. Then Australia's retail as well this morning, 1.1% up month on month from April. So we've got good numbers coming out from around the world.
Yeah, we certainly have. And this is what you would expect, that as we come out of recession, there are going to be days when we have some fantastic numbers. Then there'll be days when the numbers won't be as great, or maybe they'll miss analyst expectations. And then the market will go, oh dear, what happened there? But ultimately, even when you have a look at the China numbers, some people were saying, oh, look at the PMI numbers. They weren't as good as last month's. And then you go, well, 55 isn't a bad number, is it?
Yes, absolutely.
It's still above 50. So therefore, the services sector is expanding. So what are you complaining about? And we will get these bouts where there'll be some people who will think that the glass is half empty, and the others who think that the glass is half full. But all along, we will be seeing a gradual recovery, and in some cases it'll be a spurt, and in other cases it will be a case of ho-hum. It's a little bit better than we thought, but not as great. But the ultimate number will be those non-farm payrolls, you know, that people are quite worried about, because on the one hand, it's great to have more people in work, but on the other hand, it could freak people out, you know, if the number was too high, and then the Fed may have to start talking about tightening again.
Now, you know, one number that's creeped up quietly and now is in the spotlight is the appreciation of the Chinese yuan. It's appreciated around 10% in the past year. And now it looks like authorities are looking to control its rise. What's your view on this?
Well, you know, it's China's own fault. No, but ultimately, when you have a look at the interest rates that you can get on the Chinese yuan, and you compare that with what you can get elsewhere, and I'm talking about the rest of the developed economies, it is a lot better. So if you have got cash lying around and you think, well, I don't want to leave it in the bank because it's earning me nothing, so let's go and put it into Chinese yuan. And as increasingly more people recognize the fact that the Chinese yuan is yielding more than other currencies, say the euro or even the US dollar, then of course, as more people start putting their money into the yuan, it's going to force up the value of the yuan. Now, the Chinese government doesn't really want the yuan to be that high because it says, what's going to happen to our manufacturing? People are buying goods from China, and previously the attraction of the buying goods from China was that the Chinese yuan was low. So it has a problem on its hands. And it also has another problem, and that is that inflation is rising in China. So those producers in China are saying, well, we want a strong yuan because then it means that we can buy commodities and the parts that we need in order to make the goods that we're going to then sell at a lower cost. Yeah. And if the yuan were to actually fall, it's going to make things more expensive. But one thing I just want to end with, Brian, on this note is that currencies don't exist in isolation. You are always comparing one currency with another. So Chinese yuan's going up. Why? Because the US dollar is going down. And why is that happening? Because the Fed is printing a lot of money. And so therefore, it's going to depress the US dollar.
Now, on a different note, in the Smart Investor, you've highlighted 3 stocks in Singapore, which have doubled in the past year and are poised to grow further. Could you tell us a little bit about them?
Okay, well, the first one is a company called Hourglass, and this company sells watches, very expensive watches, not like the ones that I wear, which are cheap and cheerful. I mean,
and me too.
I mean, these are the Rolexes, the Patek Philippe's, you know, and the Omegas, and those expensive watches. Now, what they've actually learned from the last slowdown in the global economy has helped them this time around. And so consequently, they've been able to generate a lot more profit. Even though their revenues were a bit on the flat side, they were able to generate a lot more profit. And the market recognized this and they rewarded the company. And so Hourglass has done pretty well. I mean, the other one is a company called iFast. No surprises there because iFast is ultimately a brokerage. And there are lots of people out there who are saying, I need to buy shares. And so they flock to brokerage companies. And it's not just iFast. If you have a look at brokers all around the place, and of course stock exchanges around the place, there is a lot of activity going on because people aren't earning anything on the money that they just leave in their bank account. So coupled together with a bit of the lockdown fever that people have, they're sitting at home, they're getting money from the government and they're saying, what do we do with this? So let's go out and buy some shares, and those who have done so have done exceedingly well. So we have Hourglass, we have iFast, and the other one is Propnex. And Propnex is an estate
a real estate company, right?
Well, exactly. And you know what's happening to real estate prices around the world. People are piling into real estate. Again, it has been fueled by so much liquidity around the place. And there are lots of wealthy people, even people, you know, who just want to get on the property ladder because they don't want to miss out on rising asset prices. And so those 3 companies primarily are fueled by demand for quality, which is in the case of Hourglass, demand for property, and also demand for yield, which is pushing up the share prices of brokerages and of course their profits. The more you trade, the more they make, Brian.
Yep. David, thank you very much for your insights.
Thank you.
Now, we've been speaking to David Kuo, the founder of the Smart Investor in Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations. Thank you very much for tuning in.